For nearly a century, the US dollar has been the foundation of the global financial system. Not just a currency, but really the infrastructure behind modern commerce itself. International trade, reserve banking, commodity markets, global finance, all of it was built around the assumption that the dollar would remain the center of the world economy indefinitely. But today, that assumption is starting to shift. Now, that does not mean the dollar is collapsing. And it does not mean the United States suddenly is losing its position as a global power. Not at all. What it does mean is that the architecture of global finance is evolving. Economic influence is becoming more distributed. Financial systems are becoming more digital. And power itself is no longer measured only by military strength. Today, power also comes from technology, infrastructure, supply chains, artificial intelligence, of course, manufacturing, and financial systems themselves. China is probably the clearest example of what I'm talking about. China's rise has not primarily come through military confrontation, not at all. In recent years, at least, it has come through manufacturing dominance, infrastructure investment, supply chain control, technology expansion, and long-term economic positioning. Recently, we have been reminded of the historical tendency for conflict between rising powers and established powers. But the important part of that conversation is not just geopolitical tension or transition. It's the recognition that economic systems themselves are becoming the real instruments of global influence. And we're seeing a similar shift in the Middle East. More and more analysts believe Iran's leverage is not necessarily about winning a traditional war militarily. It's about economic disruption, energy markets, shipping routes, inflationary pressure, supply chain instability. In other words, the battlefield itself is changing. It's becoming economic. And all of this matters because reserve currencies ultimately depend on one thing: confidence. Confidence in institutions, confidence in governance, confidence in long-term purchasing power, confidence that the system itself will remain stable and trusted. When that confidence starts fragmenting globally, diversification accelerates naturally. And I believe that's one reason interest in blockchain infrastructure, decentralized finance, digital wallets, and borderless payment systems continues growing around the world. It's no endemic, not simply because of hype, but because the world itself is becoming more digital, more global, and more interconnected. Younger generations already live this way. They work remotely. They transact globally. They move between digital ecosystems naturally. To them, digital finance systems often feel more intuitive than institutions originally designed for the industrial age. Now, within that broader transition, projects connected to decentralized finance obviously attract attention. But I think the more serious conversation is not about speculation. It's about infrastructure. Historically, the systems that survive technological transformation are rarely the loudest systems. They're the systems that build durable infrastructure capable of supporting real participation and real-world utility. And that distinction matters when we talk about cause vision and cause coin, because the long-term significance of any digital financial ecosystem is probably not the token itself. It's the infrastructure surrounding it. That's where Cause Wallet and Cause Card become important to this conversation. Cause Wallet is designed to function as a digital financial gateway for an increasingly borderless economy. Cause Card extends that into everyday commerce while connecting transactions directly to the philosophy behind Causeism. So the larger vision is not simply creating another cryptocurrency. The larger vision is creating infrastructure, payment systems, digital wallets, transactional ecosystems, global participation tools, financial systems capable of integrating both commerce and measurable social impact. Now, whether any particular platform succeeds long term remains uncertain. That's true with any emerging technology. But historically, infrastructure creates durability. Utility creates relevance. And systems that solve real-world problems tend to outlast systems built purely around speculation. What makes Causecoin philosophically different is it's a connection to Causeism itself. To learn more, go to Causeism.com. Cause with an E is ism.com. Causeism asks a larger question. Can financial systems evolve beyond purely transactional economics? Can participation itself create both economic value and measurable humanitarian impact at the same time? Instead of separating commerce and giving into completely different worlds, can they actually become integrated, coexist? Because ultimately, I think this conversation is about something much bigger than cryptocurrency. It's really about the future structure of trust. The world appears to be moving toward a financial environment that is increasingly digital, increasingly interconnected, and less dependent on singular centralized systems, such as the US dollar. Whether that transition happens gradually or accelerates through geopolitical instability remains unclear, but the direction itself is becoming harder to ignore. And in the end, the most important shift may not simply be the weakening of the dollar. It may be the emergence of a world where financial systems compete not only on efficiency and scale, but on transparency, accessibility, participation, resilience, and purpose.
Learn more at Causeism.com.